Here's the brutal truth nobody wants to hear. The poor chase excitement and the rich master boredom. That's it. That's the entire game. And if you can't sit still long enough to hear what I'm about to tell you, you've already lost. I'm William Vanderbilt, and over the next 30 minutes I'm going to show you why every dopamine hit you're chasing right now is costing you millions. Why Warren Buffett makes 3 decisions a year and became worth $600 billion. Why Bill Gates locked himself in a cabin twice a year doing absolutely nothing but thinking. And why the ability to be bored, genuinely, painfully bored, is the most valuable economic asset you'll ever develop. This isn't theory. This is the discipline of delayed dopamine over quick thrills. And by the end of this, you'll understand exactly why boredom creates millionaires while excitement creates broke people pretending to be successful. Let me start with something that's going to make you uncomfortable. Right now, as you're listening to this, your brain is fighting me. It wants you to check your phone. It wants a notification. It wants that little dopamine spike. And that impulse, that exact neural pathway firing in your brain right now, is the reason you're not wealthy yet. Neuroscientist Dr. Anna Lembke calls our world a dopamine nation. Every social media platform, every app, every digital distraction is engineered using variable reward systems, the exact same mechanism that makes slot machines addictive. You scroll, you get a like, dopamine releases, you refresh, you see a new post, dopamine releases. Your brain is being trained systematically to crave instant gratification. And here's what nobody tells you. Neurologically, this state is almost identical to cocaine addiction. Now, before we go further, let me be very clear about something. If you're serious about building real wealth, if you actually want to escape the trap that 99% of people are stuck in, you need to do 3 things right now. Hit the like button, subscribe to this channel, and share this with someone who needs to hear it. Because what I'm about to reveal isn't just information, it's a psychological rewiring that most people will never experience. And if you're not willing to take 30 seconds to lock in your commitment to this transformation, you're not ready for what comes next. Those 3 actions tell me you're serious. They tell me you understand that success requires small, boring commitments that compound over time. So do it now, then come back. I'll wait. Good. Now let's talk about what that dopamine addiction is actually costing you. When you spend 15 minutes scrolling social media daily, that's not just lost time. That's 91 hours annually. But here's the real damage. Every dopamine hit from distraction is a missed compound return. Not just in money, but in focus, in skill development, in strategic thinking. You're training your brain to prioritize immediate gratification over delayed rewards. And wealth building is nothing but delayed rewards. The wealthy understand this at a molecular level. They've recognized that the ability to tolerate boredom is an economic asset. Warren Buffett, the greatest investor who ever lived, embodies this completely. George Soros said it perfectly. If investing is fun, if you're having fun, you're probably not making any money. Good investing is boring. Buffett and his partner Charlie Munger built a $600 billion fortune on what Munger calls the discipline of patience, the ability to sit still and wait for opportunities while everyone else is frantically trading, desperately seeking that next exciting move. Let me tell you a story that proves this principle beyond any doubt. It's about 2 investors I encountered early in my career. Both started with identical capital, identical education, identical market access. Let's call them Marcus and David. Marcus was brilliant, quick thinking, always on top of market news, constantly making moves. He day traded tech stocks, jumped into cryptocurrency pumps, flipped real estate properties. Every conversation with Marcus was exciting. He always had a new strategy, a new insight, a hot tip. His friends loved talking to him because he made investing sound thrilling. Marcus felt alive when he was trading. The rush of watching his positions move, the adrenaline of timing the market, this was what he lived for. David, on the other hand, was boring, painfully boring. He invested in index funds. He bought boring companies like utilities and insurance firms. He checked his portfolio maybe twice a year. When people asked him about his investments, his answers were so mundane that conversations would die. "I'm just holding," he'd say, "nothing new." At parties, people would drift away from David because he had nothing exciting to share. 10 years later, Marcus had lost 40% of his initial capital. He'd had some wins, big, exciting wins that felt incredible in the moment, but the losses outweighed them. The constant trading fees, the emotional decisions, the times he held too long hoping for a bigger gain, the times he sold too early out of fear, it all compounded against him. Marcus had spent a decade feeling like an investor, feeling engaged and active and smart, but he'd destroyed wealth. David, the boring guy, he'd turned his initial investment into a 350% return. He'd done almost nothing, literally nothing. He set up automatic monthly investments, he ignored market crashes, he never checked CNBC, he never felt the thrill of a big trade. He experienced almost nothing happening month to month. It was painfully boring. The market moves felt small, the deposits felt insignificant. But over a decade, boredom became a life-changing fortune. This is the Marcus David paradox, and it plays out millions of times across every economy. The exciting investor loses. The boring investor wins. Why? Because Marcus was optimizing for dopamine, and David was optimizing for compound returns. Marcus was playing a game that felt good. David was playing a game that made money. The mathematics of wealth creation demands boredom. Let me prove it to you with numbers you can verify right now. If you invest just $2,600 annually, that's $50 per week, roughly the cost of a couple of restaurant meals or a few impulse purchases, in an index fund averaging 9% returns, here's what happens. After 10 years, that consistent, boring investment strategy yields $39,501. That's a 1,420% return. But here's what you need to understand. The person doing this experiences almost nothing happening. Month after month, year after year, the gains feel insignificant. There's no excitement, no big wins to brag about, no adrenaline rush, just boring, consistent deposits and slow, invisible growth. Most people can't tolerate this. They abandon the strategy after 2 or 3 years because it feels like nothing's happening. They get bored, so they chase excitement, day trading, cryptocurrency, real estate flipping, whatever produces that dopamine hit. And statistically, 90% of retail day traders lose money. They got their excitement. That was the reward. The money was never coming. The Stanford marshmallow experiment proved this decades ago. Psychologist Walter Mischel put 4-year-olds in a room with a marshmallow and told them if they could wait 15 minutes without eating it, they'd get a second marshmallow. Some kids ate it immediately, others waited. The researchers followed these children for 40 years. The kids who delayed gratification, the ones who tolerated the boredom of waiting, had better life outcomes across every metric: higher income, lower debt, better relationships, better health. This wasn't about intelligence, it was about impulse control. The ability to resist immediate reward, the capacity to be bored and not seek stimulation. That's the skill. That's what separates wealth builders from wealth seekers. Now let me show you how the ultra-wealthy weaponize this principle. Warren Buffett operates on a philosophy that horrifies modern investors. He makes only 3 good decisions per year. 3. In 365 days, Buffett might make 3 significant investment decisions, and the rest of the time he does nothing. He reads, he thinks, he waits. At 94 years old, with a net worth exceeding $600 billion, Buffett has proven that inactivity in investing is a wealth multiplier. His philosophy is radical and simple. Time in the market is more important than timing the market. He invests in boring companies, utilities, insurance firms, American Express, industries that lack excitement but possess enduring competitive advantages, companies that do the same thing year after year after year, generating consistent, boring profits. Buffett has demonstrated that the hardest investment skill isn't finding opportunities. It's resisting the urge to act when patience is the better strategy. Most professional investors are incentivized to appear active, to justify their existence through constant trading. They have to show clients they're doing something, making moves, staying engaged. Buffett rejects this entirely. His 5-decade investment record proves that boredom, discipline, and resistance to market noise produces superior returns. There's a story Buffett tells about his approach that captures this perfectly. During the dot-com bubble of the late 90s, Everyone was making money in tech stocks. Internet companies with no profits were seeing their valuations skyrocket. Investors were becoming millionaires overnight, and Buffett refused to participate. He was publicly mocked. Critics said he'd lost his edge, that he didn't understand the new economy. His fund underperformed for years while everyone else was getting rich on internet stocks. Then the bubble burst. Companies that were worth billions went to zero. Fortunes evaporated overnight, and Buffett, who'd been sitting in boring, profitable businesses the entire time, emerged not just unscathed, but positioned to buy incredible assets at fire sale prices. He'd tolerated years of boredom, years of being called outdated, years of watching others get rich on excitement. And when the dust settled, he was proven right. The boring strategy won, it always does. Let me ask you something and be honest with yourself. Could you have done what Buffett did? Could you have sat there watching everyone around you make money, feeling like you're missing out, being called a fool, and still done nothing? Most people can't. Their need for excitement, for validation, for that dopamine hit of being part of the action, it overwhelms their discipline. That's why Buffett is worth $600 billion, and most investors retire with modest returns. Bill Gates understood this from a completely different angle. Gates institutionalized boredom as a productivity mechanism through what he called think weeks. Twice a year, Gates would isolate himself in a secluded cabin for an entire week. No emails, no calls, no meetings, no human interaction. Just Bill Gates, alone, with a stack of papers and books, working 18 hours a day in complete focus. This wasn't vacation. This was mandatory, systematized boredom. Gates would read technical papers, strategy documents, industry analyses, boring, dense material that required sustained attention. And during these think weeks, some of Microsoft's greatest strategic insights emerged: the decision to embrace the internet, the pivot to cloud computing, major product directions that shaped the technology industry. All came from Gates sitting alone, bored, thinking deeply. During Microsoft's early days, Gates practiced even more extreme focus. He would work 36-hour stretches at a time, coding continuously, then collapse for 10 hours and return to work. His colleague Paul Allen described watching Gates fall asleep mid-line of code, then wake up and resume coding from the exact point he left off, an almost inhuman feat of concentration. This wasn't natural talent. This was a deliberate rejection of distraction. Gates understood something essential that most people never grasp. Deep work requires boredom tolerance. The ability to sit with a complex problem for hours without seeking external stimulation is the neural equivalent of compound interest. When your brain learns to go deep, to stay focused without dopamine hits, you enter what psychologists call flow state, where your most creative and productive work emerges. Here's what nobody tells you about flow state. You can't access it if you're dopamine addicted. If your brain is constantly seeking that next notification, that next like, that next stimulation, you'll never go deep enough to reach flow. You'll stay on the surface, producing surface-level work, getting surface-level results. The wealthy have trained their brains to go deep. That's the difference. Now, before I continue, I want you to pause and think about your biggest challenge right now in building wealth. What's the one thing holding you back? Drop it in the comments below. Tell me what you're struggling with. Because here's what I've learned. The act of articulating your challenge is the first step to solving it. And when you see other people's responses, you realize you're not alone. This community we're building here is about collective elevation. So take 30 seconds, scroll down, and share your biggest obstacle. I read every single comment and I'll respond to as many as I can. Do that now, then come back for what I'm about to tell you about Jeff Bezos. Jeff Bezos took the boredom principle and applied it to business strategy in a way that changed commerce forever. When he founded Amazon in 1994, he made a decision that Wall Street considered insane: prioritize long-term dominance over immediate profits. For years, Amazon didn't make money. It was deliberately unprofitable, investing every dollar back into infrastructure that wouldn't generate returns for a decade. Wall Street analysts criticized him relentlessly. Investors demanded profits. Competitors mocked Amazon's business model, and Bezos ignored them all. His principle was brutally simple and impossibly rare. If you're willing to operate on a 10 to 20-year time horizon, you're competing against virtually nobody, because most companies obsess over quarterly earnings. Bezos explicitly told shareholders in his first annual letter, "We will make investment decisions in light of long-term market leadership considerations rather than short-term profitability considerations." Translation: we're going to be boring, patient, and focused on the distant future while everyone else chases quarterly results. This meant unglamorous work, building data centers nobody cared about, perfecting logistics networks, accepting losses to capture market share. Boring, grinding, unsexy work that produced no immediate dopamine, no immediate validation, no immediate success. The result? Amazon is now valued at over $1.4 trillion. Bezos built one of history's greatest fortunes by tolerating the boredom of not seeing immediate returns. Most entrepreneurs would have abandoned ship. The pressure to show profits, to satisfy investors, to prove the business worked, it would have been overwhelming. Bezos had the discipline to be boring for decades. There's a decision-making framework Bezos uses that reveals his approach to boredom. He calls them Type 1 and Type 2 decisions. Type 1 decisions are irreversible. You can't go back. These require deep, careful thought. Type 2 decisions are reversible. You can change them easily. Bezos says most decisions are Type 2, but people treat them like Type 1, agonizing over them, seeking consensus, moving slowly. This creates excitement and activity, but destroys speed. Bezos' solution: make Type 2 decisions fast with minimal information, accepting that some will be wrong, but you can reverse them. Reserve your deep thinking, your boring, focused, patient analysis, for the few Type 1 decisions that actually matter. This framework eliminates most of the false urgency and false excitement that destroys focus. It creates a system where boredom becomes strategic. You're only deeply engaged where it matters most. Most people do the opposite. They make snap decisions on important things and agonize over trivial things. They'll spend 3 hours researching which streaming service to subscribe to, but make career decisions impulsively. Bezos inverted this completely. Boring consistency on small decisions, intense focus on critical decisions. That's the system. Steve Jobs approached boredom from yet another angle: simplicity through relentless elimination. Jobs believed that focus requires saying no to almost everything. At Apple, he would pick one feature per quarter, just one, and throw all resources at perfecting it. If you proposed a new feature, Jobs would likely reject it. Not because it was bad, but because it diluted focus. During meetings, Jobs would look around the room, and if he decided someone wasn't essential to the discussion, he'd ask them to leave, right there, in front of everyone. This sounds brutal, but it was actually about respecting focus. Jobs understood that every person in a meeting, every feature you add, every product you launch, every distraction you entertain, is a vote against depth. His philosophy was counterintuitive. Good companies add features. Great companies eliminate features. Jobs despised complexity, not because it looked bad, but because it diluted focus. By tolerating the boring work of simplification, of saying no, of stripping away everything non-essential, Jobs created products that seemed revolutionary, but were actually just relentlessly focused. The first iPhone had no apps, no copy-paste, no video recording, features every competitor's phone had. Jobs eliminated them, too distracting, not focused enough, and the result changed the world. Jobs applied this same discipline to his personal life in ways most people find extreme. He wore the same outfit every day: black turtleneck, jeans, New Balance sneakers. Same thing, every day, for years. Why? Decision fatigue. Jobs understood that every trivial decision you make, what to wear, what to eat, whether to check email now or later, depletes your mental resources. It creates tiny dopamine moments that fragment your focus. So Jobs made his presentation and daily routine boring and automatic. He had the same breakfast. He structured his days identically. He eliminated decision fatigue around trivial matters, so his brain had maximum capacity for strategic thinking. Boredom in routine created freedom for obsessive focus on what mattered. Most people think this sounds like a terrible way to live, They want variety, novelty, excitement in their daily choices, and that's fine if they want ordinary results. But Jobs understood that extraordinary results require extraordinary focus, and extraordinary focus requires boring consistency in everything that doesn't matter. Elon Musk weaponized boredom differently again. Musk manages 3 multi-billion-dollar companies, Tesla, SpaceX, and Neuralink, using what he calls time boxing. He breaks his entire day into 5-minute blocks, with each block assigned a single task, not 10-minute blocks, 5-minute blocks. This isn't productivity theater. This is pathological focus combined with systematic boredom management. Musk eliminates dopamine sources ruthlessly. He doesn't browse social media casually. When he uses social media, it's with precision and purpose. He doesn't check emails randomly. He has dedicated times for email. He doesn't have unstructured think time. Every moment is scheduled and purposeful. When he's working on rocket engines, his stated priority, 80% of his time goes to engineering and manufacturing problems, not to high-concept visionary thinking. The result is Musk accomplishes in a year what most executives consider a decade's worth of work. This isn't because Musk is superhuman. It's because he's rejected the dopamine economy entirely. He prioritizes signal over noise and refuses to waste time on activities that don't advance his core missions. There's a story from SpaceX's early days that illustrates Musk's approach perfectly. In 2008, SpaceX had failed 3 rocket launches in a row. The company was nearly bankrupt. Musk had one more launch attempt left. If it failed, SpaceX would die and a decade of work would be worthless. The pressure was unimaginable. During this period, Musk didn't panic. He didn't seek comfort or distraction. He went deeper into the engineering. He slept at the SpaceX facility. He worked longer hours reviewing every technical detail, every system, every calculation. While others might have sought relief from the stress through distraction, Musk did the opposite. He embraced the boring, grinding technical work even more intensely. The 4th launch succeeded. SpaceX survived. And the discipline Musk demonstrated during that crisis became the foundation for everything that followed. That's what boredom tolerance looks like under pressure. Not escaping into excitement, but going deeper into the boring, essential work. Charlie Munger, Warren Buffett's 99-year-old partner, distilled the entire wealth-building philosophy into a single word when asked about his success: secret, rational. Rationality, he explained, means keeping raw, irrational emotion under control and possessing patience, discipline, and an ability to take losses without going crazy. Munger's genius isn't in making exciting predictions, it's in avoiding obvious mistakes and waiting patiently for genuinely undervalued opportunities. He has gone years without making a single investment, employing a legendary patience that most investors find unbearable. When asked about this, Munger said something profound. "We have a passion for keeping things simple. If something is too hard, we move on to something else. What could be more simple than that?" This is radical. Munger advocates a philosophy where you don't try to be brilliant, you just avoid being foolish. This creates a mentality where you're not chasing home run trades or exciting opportunities. You're avoiding disasters while letting compound interest work. For Munger, boredom is a sign you're doing something right. If an investment is interesting and complex, he likely avoids it. Simple, boring, reliable businesses are where fortunes are built, because boring means sustainable, transparent, and low risk. Munger tells a story about fishing that captures his investment philosophy perfectly. He says most investors are like fishermen who go to popular fishing spots because that's where everyone is catching fish. It's exciting, competitive, active. Munger says he'd rather find a fishing spot where nobody is fishing, but where the fish are abundant. It's boring. You're alone. There's no competition, no excitement. But you catch more fish. That's the Munger approach to wealth. Find boring opportunities everyone else overlooks because they're not exciting enough. Wait patiently for the right moment. Act decisively when it arrives. Then go back to being boring and waiting. Over 50 years, this approach built one of history's greatest investment records. When Satya Nadella took over Microsoft in 2014, the company was fractured and struggling. Rather than making flashy changes or dramatic pivots, Nadella committed to a slower, systemic transformation. He emphasized empathy, collaboration, and a growth mindset, decidedly unsexy concepts. These aren't things you put on a billboard. They don't generate headlines. They're boring cultural shifts. But Nadella understood that sustainable transformation requires boring, consistent cultural work. He didn't chase the exciting thing. He focused on the foundation, slowly rebuilding how people worked together, how they thought about products, how they approached customers. It was unglamorous, grinding, patient work. And it transformed Microsoft into the world's most valuable publicly traded company. Ray Dalio, founder of Bridgewater Associates, built the world's largest hedge fund by creating systematic, algorithmic investment processes that remove human emotion and excitement entirely. His risk-parity approach is deliberately boring. Diversify across 15 uncorrelated assets, rebalance automatically. Follow discipline over intuition. There's no drama, no genius trades, no exciting market calls. Just systematic, boring adherence to a process. The result? Consistent, superior, risk-adjusted returns for decades. Dalio didn't win by being more exciting than other hedge fund managers. He won by being more boring, more systematic, more disciplined. He built a machine that removes the human tendency to seek dopamine through exciting trades. Now let's talk about what dopamine addiction actually costs you financially. Research shows that people spending over 3 hours daily on social media exhibit increased impulsive buying, reduced self-control, and diminished long-term planning. Social media companies deliberately engineer addiction using variable reward schedules, the exact psychological mechanism as slot machines. This creates a dopamine deficit state when you stop scrolling, making you feel compelled to return. I'll give you a real example. I once consulted with a corporate executive earning $400,000 annually. 6 figures, serious income, and she was living paycheck to paycheck, completely broke despite massive earnings. When we analyzed her spending, the pattern was clear. Dopamine-driven purchases to maintain appearances. Designer clothes she wore once. Luxury experiences for Instagram. Expensive restaurants not because she enjoyed them, but because they provided content and social validation. She was optimizing for dopamine, not wealth. Her high income was being completely consumed by her addiction to the feeling of looking successful rather than being successful. When we broke down the numbers, she was spending roughly $12,000 monthly on dopamine, purchases that provided temporary excitement but zero lasting value. That's $144,000 annually burned on fleeting good feelings. We restructured her finances around boring consistency, automated savings, index fund investments, elimination of social media during work hours. Within 2 years, she'd accumulated over $200,000 in investments. Same income, completely different outcome. The only variable was her dopamine management. This is the hidden cost of excitement seeking. It doesn't just waste time, it actively destroys wealth through impulsive decisions, attention fragmentation, and an inability to engage in the deep, focused work that builds value. So how do you build boredom tolerance? How do you develop this skill that the wealthy have mastered? Let me give you the actionable system. First, schedule boredom blocks. Bill Gates's Think Weeks are formalized boredom time. Device-free space for deep reflection, reading, and strategic thinking. You don't need a week in a cabin. Start with 1 hour weekly. No phone, no computer, no distractions. Just you, a notebook, and whatever deep thinking your life requires. This isn't meditation. This isn't relaxation. This is active, focused thinking time. Buffett does similar extended reading sessions. Even 1 hour weekly of device-free reflection produces measurable strategic clarity. Second, replace dopamine hits with stillness. Instead of scrolling during downtime, journal. Read long-form content, sit in silence. Oprah Winfrey emphasizes what she calls working in silence, allowing progress to compound without seeking external validation or dopamine hits from sharing updates. This retrains your brain to find reward in internal progress rather than external feedback. The first few weeks feel terrible. Your brain will scream for stimulation. Push through. After a month, you'll notice something remarkable. You can think deeper, focus longer, and resist impulsive decisions more effectively. Third, use boredom to identify asymmetric ideas. When your mind isn't fragmented by constant stimulation, pattern recognition emerges. Warren Buffett reads 500-plus pages daily of what he describes as deliberately boring material: annual reports, financial disclosures, regulatory filings. This sustained focus reveals opportunities others miss. The boredom itself is the filter that separates signal from noise. If something remains interesting, even when studied deeply and boringly, it's probably worth your attention. Fourth, automate decision-making for trivial matters. Musk, Gates, and Nadella all automate trivial decisions to preserve focus. Wear the same thing daily. Eat the same breakfast. Schedule emails for specific times. Create systems that eliminate micro-decisions. This isn't about being rigid. It's about conserving dopamine for decisions that matter. Every trivial decision you make depletes your mental resources. Automate the trivial, focus on the critical. Fifth, embrace the compound effect of consistency. Every wealth builder emphasizes this principle. Small, consistent, boring actions over decades produce exponential results. $50 invested weekly becomes $39,500 in a decade. 1 hour of deep work daily becomes 250-plus hours yearly. Boring consistency beats exciting sprints every single time, without exception. Let me give you a framework for understanding this. Imagine two paths. Path 1 is exciting. You chase trends, make bold moves, take big risks, experience dramatic wins and dramatic losses. You feel alive. You have stories to tell. You're engaged and active. Path 2 is boring. You make consistent, small, unsexy decisions. You ignore trends. You follow a simple plan. Nothing exciting happens. You have no stories to tell. After 1 year, Path 1 looks more successful. The exciting person has stories, experiences, some wins. The boring person has modest, invisible progress. After 5 years, they're roughly even. The exciting person has had some big wins, but also some losses. The boring person has steady, unremarkable growth. After 10 years, Path 2 is clearly ahead. Compound interest has taken effect. The boring strategy has produced measurable wealth, while the exciting strategy has produced drama. After 20 years, it's not even close. The boring person is financially independent. The exciting person is still chasing the next opportunity. This is mathematical. This is not opinion. Boring consistency, given enough time, beats exciting volatility in every wealth-building scenario. The only question is whether you have the discipline to be boring long enough for compound interest to work. Here's the deepest insight the wealthy understand, and this is what I want you to internalize completely. Boredom is actually freedom. When you master tolerance for boring, repetitive work, whether it's reading financial statements, executing a disciplined investment plan, or maintaining focus on a long-term goal, you escape the tyranny of dopamine seeking. You're no longer enslaved to the next notification, the next purchase, the next excitement. The person chasing dopamine through shopping, gambling, social media, and constant novelty is, paradoxically, imprisoned. They're enslaved to an endless cycle of stimulation and letdown. They need the next hit and the next and the next. They can never rest. They can never be satisfied. They're trapped in a hamster wheel of seeking excitement to fill an inner void that excitement can never fill. The wealthy person who has mastered boredom has escaped this cycle entirely. They experience genuine peace, not the pseudo-peace of distraction, but actual contentment from long-term progress and compound growth. They don't need constant stimulation because they've found satisfaction in patient building. They don't need external validation because their results speak for themselves. They don't need exciting stories because their bank account tells the only story that matters. Oprah Winfrey summarizes this perfectly. Real power moves in silence. Real discipline creates freedom, and real abundance comes from within. This is the inverse of what the modern world teaches. We're taught that excitement equals success, that visible activity equals productivity, that noise equals importance. The wealthy have learned the opposite. The best moves happen in silence. Real productivity is boring and consistent, and importance is invisible until it compounds into undeniable results. Let me prove this with simple mathematics. A person who tolerates boredom long enough to invest $150 monthly for 40 years at 8% annual returns will accumulate $377,000, not from making clever trades, not from getting lucky, not from having insider information, purely from boring consistency and compound interest. This same person, if they spend that $150 monthly instead of saving it, accumulates zero wealth and likely accumulates debt instead. Both people made a choice. Both people had the same resources. Only one person made a boring choice. And that boring choice, repeated monthly for 40 years, created a $377,000 difference in outcome. That's the math. That's the proof. That's why boredom creates millionaires. The wealthy didn't get rich by being more exciting than you. They got rich by being less exciting, more disciplined, more boring, more willing to sit still while everyone else ran around chasing the next dopamine hit. In a world obsessed with instant gratification, boredom has become the ultimate competitive advantage, the ultimate wealth multiplier, and the ultimate freedom. This is why the poor chase excitement while the rich master boredom. This is why Warren Buffett sits in an office in Omaha reading annual reports while day traders burn through their capital chasing exciting trades. This is why Bill Gates locked himself in a cabin while his competitors were networking at conferences. This is why Jeff Bezos tolerated years of losses while Wall Street demanded immediate profits. They understood something that most people never learn. Wealth isn't built in moments of excitement. Wealth is built in years of boring, consistent, disciplined action that nobody sees, nobody celebrates, and nobody understands until the compound effect becomes undeniable. So here's what you need to do right now. Not tomorrow, not next week, right now. Identify one source of dopamine in your life that's costing you wealth. Maybe it's social media. Maybe it's impulsive shopping. Maybe it's constantly checking market prices. Maybe it's seeking validation through expensive purchases. Identify it, then eliminate it for 30 days. Replace that dopamine source with one boring wealth-building habit. Maybe it's reading for an hour daily. Maybe it's automated investing. Maybe it's dedicated focus time on a skill that increases your income. Pick one boring habit. Do it consistently for 30 days. No excitement, no drama, just boring, repetitive action. At the end of 30 days, evaluate the results. Not how you feel. Feelings are dopamine-driven and unreliable. Evaluate the actual results. Did you save more money? Did you learn more? Did you build something valuable? Did you make progress toward long-term goals? If the answer is yes, you've just discovered what every wealthy person knows: boredom works. Then extend it. 60 days, 90 days, a year, 5 years, 10 years. At each interval, the boring choice compounds. The results become more pronounced. The gap between you and the excitement seekers widens, and eventually you realize you've built something that people who chose excitement never will. Genuine, sustainable, life-changing wealth. This is the discipline of delayed dopamine over quick thrills. This is why boredom creates millionaires. This is the secret that's been hiding in plain sight, while everyone else was distracted by the next shiny object, the next exciting opportunity, the next dopamine hit. The question isn't whether this works. The math proves it works. The question is whether you have the discipline to be boring long enough for it to work for you. Because here's the final truth. There are no shortcuts to wealth, but there is a clear path. And that path is paved with boring, consistent, disciplined decisions that nobody applauds, nobody celebrates, and nobody even notices until you've won. The choice is yours. Chase excitement and stay broke, or master boredom and build wealth. It's that simple, and it's that hard. Welcome to the real game. Now go be boring. Your future self is depending on it.